Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Taiwan index opened with gains of 1% as well, more than 1%, while Hang Seng is also opened up with gains of 0.12%.
NATO's making a very foolish mistake, and I've long said that, I wonder whether or not NATO would ever be there for us.
Now, the Indian basket of crude is a derived basket, right? It's a mix of Oman and Dubai and Brent.
There is no evidence of increased deflation in renewed contracts on account of the latest AI tools released by Anthropic and OpenAI.
March 12th, it increased to 127. We had March 13 at 136, and now it is at $143 per barrel.
There is one possibility, unless the government clarifies here, airlines now know that they can charge for 40% seats by rule.
Amidst the decline that we've seen in the market, a lot of these companies are down anywhere between 35 to some even 50% from their high. So Eternal, Swiggy, Urban Company, Misho, all of them are down between 38 to 45%.
In addition to some of these very, very well-known brands in the market that we now have to market, it also gives us access to new channels. The legacy of Sandoz, very high in anti-infective space.
After the muted start to this month, registration has sharply picked up in the last 2 weeks.
The advance decline ratio as well, a big margin, 5 stocks on the advancing side versus 1 on the declining.
Okay, super strong day to if this stays over the next 60 minutes, I think 1,100 odd points in 3 or 4 sessions from the lows. 23,840 is where we find ourselves at. This is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Rima and Nigel. Guys, good afternoon.
Hi, afternoon. It's been a 900-point rally from the low that we had on Monday, which was 22,955. From there, markets have literally taken off this week. The benchmark indices are up 3%. And look at the mid-cap index. The mid-cap index is up nearly 2.25%, while the frontline indices are surging 1%.
That's right. 3 out of 3 days this week. Hopefully, we can keep up the trend. And tomorrow's Gudi Padwa as well. So, the bulls will be hoping for the good news. For the time being, it still will qualify, though, as a hope rally because there's no big cool-off in Brent crude prices. And the FIs continue to sell as well. But though hope is not a data point, look at the screen, 900 points, you'll say you rather clutch on to that. And the Nifty bank up more than 2,000 points as well. But I think the biggest positive is the way the number of stocks advancing are outweighing the number of stocks declining. That's making your portfolio feel good after a while.
It's almost 5:1 advances to decline ratio. So about 2,600 stocks are higher. And you got about 500, 550 odd names which are lower. This is all NSE. And of course, that's the NSE advanced decline up on your screen as well. Just one more addition, right? Every day, at least for the last 3 days now, we've been hitting levels. I mean, yesterday, for example, we said we put out 23,590 as the resistance. That's the channel resistance on the upper end. And at the day's high, we took that out comfortably, and we closed around within 10 points of yesterday's at that channel resistance level. This morning, we said 23,830. As we speak, we're at 23,840. This is the swing high, the last swing high, which the market was not able to cling on to for very long. Now, if you are able to cross this level, these levels, 23,830, the next logical target, basically, it's called a channel extension. On the upside, you're looking at 24,300. That's the next target. If you're able to continue without a pause, without a look back, etc., etc. I'm not sure if that happens because, as Nigel also pointed out, it's not as if there is any great cooling off in terms of the actual situation on the ground with Brent or the war stopping, etc. We're not at that phase where we're starting to hear de-escalation headlines yet. But the markets, of course, are prone to these very, very sharp, gaps and intraday moves because it's been sold into heavily and it's very, very light in terms of positioning. So 23,815. So you're at that swing high, which is 830. We'll see what happens over the next 60 minutes or so. Let's just quickly run you through what's coming up on the program. So markets, of course, very much in focus, and we'll talk more about that. IT is powering the rally, right? I mean, there's a bit of a bounce which is appearing, and Rima will talk about that. So that's the star mover in that sense. Platform companies, Urban Company, Delivery, and a bunch of others are doing well. Eternal is the other one, another 3% today. So Mangalam joins in on that. And you got, so that's the other space, but not just Urban, but others as well. What should you do in the last 60 minutes of trade? That's the question. And Mitesh is with us with answer to that question. Mitesh, good afternoon. Your recommendation on the index and your specific trades.
Yeah. So, good afternoon, Prashant. I think very clearly, this looks like to be a market, which is still showing signs of bounce back and possibly extending on the upside. You rightly said 23,838.40. I think I was also marking the levels of around 23,800 for the last 2 days. We are right there. Let's see if we can close above this level, 23,800.820. If that happens, then I think 24,250 or thereabouts broadly is the next target area. So for the timing, if people had bought some long positions, at least take part profits off because you're there at 23,800, 10-20 zones, and wait for further strength. Only if it closes about 23,850, then take or add on to your fresh long positions. On the stock side, I have buy on Manappuram Finance with a stop at 263.5. for targets of 279, and Mazgaon Dock is a buy with a stop at 2409 for targets of 25.25.
So no trade on the Nifty. If you have long positions, book part profit. And if the Nifty closes above 23,815 today, then tomorrow morning go long for a potential target of 24,200, correct? Okay. What about IT? IT is leading from the front. Do you see an extension of this tactical bounce?
See, IT also, like other stocks, other sectors, the index was heavily beaten down and extremely oversold. See, when you look at the, oversold readings on the 2-hourly, 4-hourly charts, it was, nearly like record levels of oversold issues. So I think there is some bounce back. I am looking at Infi, I think as a important trade. I think the first target was around 1278, 1280. It's done that. But there's a good chance that we might see 1320. And in a good case scenario, even 1360, 70 being tested.
Okay, thank you very much for that. Let's talk about the platform companies. They've been on fire, particularly a company like Urban Company. Eternal yesterday was the top Nifty gainer. Mangalam joins in with more on this. Mangalam?
Well, for platform companies, it was never the question of growth. It was never the question of quality of these companies. It was never the question of the size of the opportunity. The worry was whether they're at the right price or not. And this correction that we've seen in the market has taken all these platform companies, the stock prices, down by anywhere between 35 to 50%. Yesterday, now as the market's stabilizing and finding some form, these platform companies are also bouncing back. So Eternal was the fastest growing Nifty company in yesterday's trading session in terms of top gainers. And we had a note that came in from brokers as well. JM Financials, for one, believes that maybe, the worst is behind for these companies and they will emerge stronger post the current geopolitical crisis. And similar is the case with Urban Company today as well, where SBI MF has gone ahead and topped up their stake. They held already 2% stake as of December. They invested 45 crore as a part of their anchor book as well as part of the IPO. And yesterday, closer to the issue price, they've gone ahead and bought 4% more stake. Remember, the company's issue price was 103. Post-listing, there was a big surge that we saw all the way up to 200 rupees, and now the recent low at 100.7 as well has many takers. The important part, while these companies are reporting EBITDA losses which are ballooning and the reason for which the stock was lower, there are a lot of investments that they're making in growing markets. So their core businesses are doing well. For Urban Company, X of InstaHelp, the EBITDA was actually 44 crore. The India services business grew 25% with an EBIT growth of 50% as well. The problem was the InstaHelp business where they are investing. So the third quarter revenue still hasn't accrued, about 7 crores, but still the EBIT loss was close to 61 crores. The company's growth prospects are fairly strong. They believe that this year, the EBITDA on services business will be a lot better than last year. They target 1,000 crore consolidated EBITDA by FY31. And InstaHelp itself, they are expecting some sort of reduction in losses per order over time. So that gives you triggers, right? Their India business must be doing well going forward. the InstaMart business should also do well, InstaHelp rather, and the optionality that Native, their consumer durables business, brings as well. And additionally, the proof of the total addressable market in InstaHelp is further cemented by some of their competitors raising funds as well. So Pronto, for one, has raised funds at a valuation of anywhere between $350 to $400 million, and this was a number which was close to $180 million just a couple of months ago. Snabit, that is. So Snabit and Pronto are the competitors for InstaHelp. So let's see where this goes from here on. These companies obviously have taken a big knock, but growth and TAM, along with the others, not a big problem.
You know, Mangalam, which of these is being talked about the most when you speak with investors who are active in this space? What looks most attractive?
Well, a couple of things. If you're playing the quick commerce space, everyone looks at Eternal, mainly because of the kind of money that Eternal in the past has generated, the leadership, the moat that it has. Barring a few, mishaps that happened at Eternal earlier with regards to maybe the leadership changes, or at the same time, if the kind of, competitive activity that we're seeing in quick commerce, etc. Eternal is still the flag bearer of new age companies when it comes to investor interest. But, the ones I speak to also say that some of the other players everything else is in perspective, right? So at $2 billion, if the total addressable market is similar for the kind of customers that are there for food delivery, for something like an InstaHelp services, then Urban Company not necessarily a bad bet. But then again, these are investor views and not my personal views. So that's a disclosure out there.
Thank you very much for that. Siddharth Khemka, Head of Research, Wealth Management, Motilal Oswal Financial Services, is now joining in. Siddharth, same question to you. Amongst all the platform new age tech companies, which one is most attractive to you and why?
Yeah, hi, good afternoon, Nirima. So I think that's a debate which continues in all the meetings with so many IPOs coming in for some of these new age platform companies. I think one more stock that is not there in the list was Lenskart, which has also got recently listed. Again, a mix of omnipresence of online, offline. But I think I would agree with Mangalam. The best of the lot continues to remain with Eternal, not only because of what they have done in the past, but largely because of the strong execution capabilities which they have demonstrated across segments, and that by far makes them the preferred pick. And one concern was definitely the increasing competition, especially from some of the new age platforms, Zepto also coming in, and the latest news flow suggesting that some of these discounting cashbacks are now going away, and hence profitability will be back. So in that scenario, the food delivery business, which has been the cash cow now for Eternal, I think that should again bounce back once the LPG supply chain and the entire impact of the war goes away, because that is something not we believe is not a structural impact, but only a temporary halt or impact on the business. So Eternal, we see a strong growth going on the long term with some of these newer businesses, for example, the Hyper Pure also turning profitable, scaling up of the potential of some of these other businesses. Example, Blinkit Pro represents a long-term generational growth opportunity, and valuation-wise now being comfortable. So we continue to remain bullish on Eternal. We have a target price of 360. That remains our preferred pick in the.
And any views on Urban Company? As Mangalam was pointing out, the peers seem to be getting pretty good competitive valuations. There is interest in the InstaHelp market, which is Urban Company's next bet, providing the solving for the daily house help problem, particularly in metro cities. So till it scales up, perhaps the company will be burning money, which is what maybe the street is worried about. So where do you stand on Urban Company?
So, Rima, we don't have official coverage on Urban Company as of now, but I would say that this is another interesting space, what they have been. And as you saw that post the IPO, there was a lot of interest in this space where they're providing services in across the segments, be it plumbing, be it electrical, a lot of household related services that they were providing. They saw a challenge coming in from Snabit, which was giving this InstaHelp kind of service, and now they have also launched that. So I think that competition, there's a huge market for that, especially as you rightly said in the urban space. And I think that would be a good growth area once that business stabilizes. Right now, as they are in a scaling up mode, the cost or the prices have been pretty competitive. So near term, I think it's a good price, but only from a long-term perspective, someone can look at some of these other platform companies as well.
Okay, thank you. We'll come back and get your views in on IT. Before that, let's run our viewers recap what CLSA has to say about Indian IT companies. Basically, they had a chat with the top 4 IT companies, TCS, Infosys, HCL Tech, Wipro, just to get a sense of how the quarter has been, a preview commentary. And the key takeaways are that 1, there is no evidence of increased deflation on account of the new AI tools. That's 1. Secondly, they're saying that some companies did flag off delay in decision making because customers are exploring these latest AI tools in terms of the potential, and plus there is the Middle East crisis. Purely in terms of the Middle East crisis, they're saying that the direct exposure for all the 4 IT companies is in single digits. So that is not too much of a concern. But they also go back and say the last 2 oil price shocks which took place. One was 2010 to 2014 and the other one was 2022. Both times Brent crude prices had crossed that $100 per barrel mark. But they're saying at both times, the US GDP was impact and Indian IT services spending growth was at par with the long-term trend. So that is also not a concern. Deal pipelines remain strong. Valuations are at a 10-year average, which is why they see a lot of upside in current levels. The stocks they're most bullish on are Persistent and Coforge. The reason is, if you pull up the PEG ratio for both of them, Persistent's PEG ratio for FY28 stands at 1. And for Coforge, it's less than 0.1. Which means they believe the valuations are attractive. For Coforge, they see 100% plus upside. For Persistent, about a 75-80% upside. But they like the rest of the pack as well. So they've got an outperform on Infi, TechM, TCS, LTI, Mindtree, and a hold call on HCL Tech and Wipro, where the upside is far more modest at 14-15%. So that's the view on IT companies. Siddharth, the argument about valuations relative to the historical averages is well made. But this whole point about that as of now, we're not seeing evidence of increased deflation due to AI tools. But that also takes time, right? These AI tools have come in the market only about a month and a half back. They're also getting refined, these new tools by Anthropic. So, I mean, should we completely dismiss, the worry on that front?
I think there's definitely some worry with regards to the AI and the entire disruption that they're doing. What we believe is that there is a large gap between the AI's theoretical capability and its observed usage, which is partly due to the enterprise's implementation constraints. In practice, what we see is that the adoption is less dependent on what AI can actually do and more dependent on how easily the organizations can integrate AI into their existing workflows as well as the technology stacks, which would take some time. And hence, the deflation that the industry is talking about, we believe that will be a slower process rather than a knee-jerk reaction, at least in terms of the financials. Hence, we believe that, and some of them, as you were talking about recently, some of the Indian IT companies, they are also scaling up their AI stack, hiring on that space and making the capabilities. So that enables the AI adoption for these companies as well, easier compared to so some of them can have money and can go out and do some acquisitions as well in the AI space and then lead to a brownfield kind of an expansion rather than totally setting up a greenfield expansion in the AI space. So I think there is mixed views. Some of them will definitely do well, purely from a long-term perspective. In the short term, there will be news flows both from the domestic front as well as from the global front, as we recently saw the NVIDIA management con call bringing back the focus on the AI stocks and hence the recovery in IT stocks today. But I think the technology stocks in India, they could remain subdued, at least for the near term, given that the disruptions are there. Next 2 quarters will be very watchful. Some of them do look good in terms of valuation. Companies like Infosys, Coforge, Persistent, these are some of the stocks that we like from the IT space, purely from a long-term perspective.
Okay, by the way, the rupee is making a move, right? It's through the 92.50 level. And look at that sharp spike which has happened, which we are highlighting. Now, 92.50 was essentially the level which the Reserve Bank of India has defended over the last 6-7 days. Actually, I mean, if you read some reports, and it's not confirmed, but the RBI seems to have spent anything between $15 and $20 billion in the defense of this level. around the 92.50 odd level, 92.40, 92.50, around that zone. And they've provided dollars, they've sold dollars through public sector banks, etc. And that level now seems to be getting breached. The big concern, of course, is going to be, disorderly depreciation itself, which will then get more people in, speculative attacks, hedges, etc. But also imported inflation. Higher dollar, lower rupee essentially means stuff which you import comes in at a steeper price. Imported inflation perhaps also a bit of a concern. But 92.56, I think we went to almost about 92.59 or so. We'll see if this holds here or the RBI is back in the picture. But that's a very sharp move. It's not as if it showed up in the equity in any sharp way. I think, 200 odd points on the Nifty still. So right there, 23,795. So it's the rupee for now. Siddharth, thank you very much for joining us. Good speaking with you. We'll come back in just a bit, and we've got a special conversation lined up on the other side. Jim O'Neill is going to be, joining us on the other side. Needs little by way of introduction. Coming up in just a bit.
Welcome back. We're facing some resistance around the 23,800 mark. So still holding up very strong, 200 points, but just come off a tad bit from the highs. But let's talk about individual stocks. The screen is alive with big moves, big volume buzzers. Hormis joins in with that list.
Well, indeed. And the broader markets are leading the charge today with some outsized moves in a lot of those names. JBM Auto is leading the pack today, and it's the biggest single-day gain that the stock has had since March of last year. So that 15% move was last seen 12 months prior. Today's volumes are at a 3-month high. Close to 4 crore shares have already been traded on JBM Auto. Take a look at the 20-day average. It's less than 2 lakh. And that's the kind of volumes that you have seen. 7% of those shares are marked for delivery. The turnover is nearing 2,000 crore rupees today. It's 85% of its free float market cap. The stock is rebounding from its 52-week lows, and it is the most traded stock on the Nifty 500 today. Not HDFC Bank, not Reliance, not Eternal, but JBM Auto is the most traded stock on the Nifty 500 today. MCX is the other one. The stock around about 1 o'clock fell almost 4% from the highs of the day. And since that announcement that was made by the NSE in that interview with CNBC-TV18, the stock there was a pickup in volumes as well. The second highest volumes of the month now for the stock. Close to 50 lakh shares were traded. The 20-day average is around about 25 lakh shares, so it's almost double of that. 44% of those shares are marked for delivery and still features among the top 5 most traded stocks in today's session. Now, Angel One is the other one. As a beaten down name is Angel One. Is a 9% higher today. The 4th straight day of gains, the biggest single day gain since October of 24, and today's volumes are the highest in 2 months, with over 2 crore shares that have been traded. The 20-day average is around about 60 lakh shares, around 3 to 4x of its 20-day average. A third of those shares are marked for delivery. And the stock began trading adjusted for its stock split sometime around about the 26th of Feb, down around 10 to 12% from those levels. And lastly, Urban Company, of course, we've been talking about this all day long. 12% higher now on the stock, seeing a bit of a cool off from the highs, but still the biggest single day gain since its listing day, which was in September of last year. Today's volumes are already double of that of yesterday. Yesterday was the big block deal that took place, but despite that, today's volumes are double of those. Now, 12.5 crore shares have been traded today. 20-day average of 50 lakh shares. 9% of those are marked for delivery. It slipped below its issue price very recently, and it's recovering from those levels. And today's turnover has exceeded its free float market cap for Urban Company. So a lot of these broader market names doing well on very strong volumes.
All right. Thank you very much for that, Hormis, and it's always a pleasure. Well, Jim O'Neill is with us. He's chairperson, Northern Gridstone. He's also, of course, in an earlier past life, he's the man who coined the acronym BRIC. Jim, welcome back. Thank you very much for joining us here on CNBC-TV18. Appreciate it. I mean, we've spoken in the past over the last 6-7 months about the role of BRICS, and it was BRIC, and now it's BRICS and BRICS plus now. But Trump's attack and dollar debasement and all kinds of things, but it's something always new, right? Incredible last 15 months or so. It's Iran now. Just your thoughts on how this is playing out, Jim, at top down. Just wanted to set the context from your side, and then we'll dive into individual specific questions.
Sure. I mean, my honest answer is it's very hard to have too confident a view about how this is going to play out, and it's probably quite dangerous to do so. I also add, part of the reason why I say that is I did my PhD during the second oil price crisis about OPEC oil prices and how they invested their wealth. It was the relatively early days of sovereign wealth funds. And one of the things I really remember is many wise people at the time, or experts, were predicting then that oil prices would go above $100 a barrel. And actually, by the time I'd finished my PhD, they'd started to come down, and then they went down for the next 20 years. So that taught me a lot about both consensus views, however well thought out they are, and also the volatility and unpredictability of many financial prices, including those of oil. So with those caveats, I find myself in the sort of what seems like the consensus view, and I think the way the markets are broadly trading it. It's a big short-term shock, but because of the interconnection with US politics and Trump's obsession with his personal rating, I do not believe the US is going to carry on with this approach for much longer. I don't think politically the Republicans can afford to support Trump doing it. I don't think Trump's own support base, as you can see in the past 24 hours, is going to support it. And I don't think Trump really understood what he was doing in the first place, other than being very opportunistic on some, what looks like, questionable advice coming out of Israel.
So political backlash will force his hand. And maybe if markets may force his hand as well, right? I mean, all are, of course, interlinked, as you say.
Yeah.
But so let's just say, as you say, you're in the consensus camp, maybe short-lived. It's the third week now, maybe who knows how long, but short-lived in that sense, not long drawn out. But will oil prices, will there be a higher risk premium built into oil now, even if this were to go away? Or this is going to be like Russia-Ukraine, war goes on, it moves into the, once in a while the headlines appear and people pay attention to it. Otherwise, not much impact.
So let me say two or three things which to some degree are inherently contradictory. Again, linked to what I learned in my PhD days, but also because of the broader, bigger picture environment that's going on. I think this will encourage many countries strategically that have been diversifying away from hydrocarbons to actually intensify those decisions. And therefore, or what economists would call, I think we'll find out that the elasticity of oil demand with respect to price is stronger than people think. And that might be also why the markets aren't getting overly carried away. The second thing to say is actually now with my markets hat on and an observation. We had that incredible spike in crude prices a week last Monday during Asian hours. And we actually ended up the day in New York around $90 a barrel. And as I'm sure any of your technical analysts that come on the show would say, that would be regarded as classically a so-called outside day or a key day reversal. And what is intriguing as we develop into what is the middle of the third week, despite some of the headline news about the Straits of Hormuz and how easily Iran seems to be still hitting at various places, the crude price hasn't really moved much the past 2 days. And that's telling me that we really need some very bad news for it to go higher than this. And the third point, as to whether it will come all the way back down again, I think that in itself is going to depend on the interplay between efforts to find some kind of diplomatic move, and I'll come back to that in a second, as well as the ongoing economic data, which of course will determine the medium-term demand for oil in the first place. I can only guess that the coincident indicators for this month, when we get them at the start of April, will probably be pretty weak all over the world. And that, I think, indirectly for the rupee that I saw you talking about before, and the Indian market, that's probably important, because of course another issue that's causing problems for markets now is the market starting to think the Fed won't cut rates, whereas before it did. Last thing to say, linking it all together and going right to how you introduced me with the BRICS, we have this very important meeting, which was going to be very important in any case, between Trump and President Xi at the end of the month. And just like with the end of the Asian crisis, just like with the end of the financial crisis, I think China's probably got a big role to play in this. And it'll be very, very interesting to watch any comments and the body language coming out of Beijing as we get closer and closer to the end of this week and into next week before this meeting, unless Trump does go ahead and postpone it.
Jim, hi. Every conflict, once it ends, reshapes the entire landscape. What do you think will be the long-term implications of what we've seen right now in the Middle East, not just in terms of Middle East, but say even the role of China? How do you think the global order changes, and what are the implications, therefore, from an investment point of view?
So again, with the caveat, one has to be really careful in getting too carried away. But again, I'm going to contradict myself, as you guys know and many viewers would know. I actually dreamt up the whole idea of the BRICS on the back of the dreadful 9/11 bombing of the World Trade Center in Washington. And in that context, I find it very hard to avoid concluding that this is going to shift more countries to the economic gravity of Asia, and India and China are going to benefit more with stronger alliances with countries in the Gulf. I think all those people that have valued the military support of the United States at the expense of obvious changing economic interests are going to find it impossible to feel the same after this conflict, because at the end, so far at least, whilst the US is obviously doing its own very big thing, it hasn't been of great immediate daily support to all these countries in the Gulf that have been depending on it. And having been actually myself to the Gulf just 6-7 weeks ago, and again late last year, it's pretty obvious that the power of India and the power of China and other so-called emerging markets is increasingly influencing economic life in the Gulf as well. And I can only see that becoming stronger as a result of this crisis.
Hi, Jim. Pleasure to speak to you. India was at the center of BRICS, right?
Yep.
For the next decade or so, if you could tell us what are the big risks, what are the big opportunities for a nation like India? Top 2, 3 on either side.
So, I just want to say at the start of that, because linked to all of this, I'm actually in the process with a co-founder launching a pretty exciting initiative, which we're going to call BRICS Plus Thinking, which is at the center of it is trying to get away from this sort of us versus them mentality, which has developed in the past few years, which has been accentuated by this current stance of Washington towards the world. And it's pretty obvious that we can't solve big, genuine global issues unless we stop this very simplistic view that, at least in the West, that everybody has to be a liberal democracy in order for you to want to deal with them. And in the spirit of Mark Carney's speech in Davos and what President Stubb from Finland often is saying recently, we have to think more seriously about what values really matter and more realism. And in that regard, I say those things because India is in an exceptionally strong position, in my opinion. And of course, coincidentally, it's going to be leading the BRICS meeting this year. And I say India is in a really strong position because it has still extremely favorable demographics, unlike many other large countries. And what is important linked to that, there are the signs obviously so far this decade, and interestingly since the COVID crisis, some of the reforms that Modi has introduced seem to be bearing fruit, and India's growth rate has actually accelerated. And so India's now about to overtake Japan and Germany to become the third largest economy. And just how the same thing of the base growing at a big amount helped China, the same is going to be true for India. And then the related thing, which is another real positive, is, of course, even though India is a central part of the BRICS, it's also pretty much coveted by many so-called liberal democracies to be a partner and an ally too. And I think the Indian leadership has played a pretty good role, to put it mildly, at how it's navigated this kind of world. The flip side of it, the negatives are obvious. That India is itself got its own huge challenge with energy resources, and it must accelerate its development in alternatives. So it's not vulnerable to the kind of shock that's happening now, because the last thing that India needs is consistently rising crude oil prices and a weakening rupee. And by boosting its own resources in alternatives, as well as continuing its reforms, and one thing I always say to you guys when I'm on it about this kind of issue, it has to try even harder to boost education for people at primary and basic school ages, so that all of India's 1.4 billion participate in this opportunity.
Absolutely. Well put, Jim. More questions, but we're in the last half hour of trading today. So we're going to say thank you and do come back again. Good conversation, Jim. And
thank you for having me on, and be safe, everybody.
Appreciate it. Thank you. And that's Jim O'Neill with the perspective on India, and of course the conflict, basically saying that this is a short-term shock, but unlikely that this stretches on for a long time. And I think what he mentioned, that 9th of March high, which is the last Monday high, which is $120, basically saying that seems like, I'm paraphrasing, but basically seems like a bit of a high point, which should hold. Let's hope so. I think futures and options, right, and markets are doing their own thing. Rupee is, of course, doing what it is. Nifty is still holding 200 points higher. Najin, take it away.
Well, that's right. If the near-term peak has been made in Brent crude prices, the bulls will be quite enthused on that front, because just a week or so ago, you're very, very nervous once we went to those elevated levels. A couple of positives, though. For this week itself, one of the positives is, for a second consecutive day, we're seeing the Nifty is making a higher high, and the Nifty Bank as well is making a higher high. So higher high and a higher low is something that you like. That's precisely what you've seen. Besides that, just take a look at the way the India VIX has come off. Just a few trading sessions ago, it went to around 23, and from 23, it's pulled back to around 19. The last thing the bulls would have wanted to see is the India VIX move to around 25 odd. Remember, that's the fear index, that's the volatility index. So that cooling off is actually a good sign. The options data, the Nifty PCR has moved to around 1.1 because the put writers are back into the game. The 23,700 put, the premium yesterday was around 300 rupees. That's come down to around 170 rupees. So for those writers, 23,700 who was writing that particular strike, their stop loss comes in at around, they remain in the money till around 23,400 or thereabouts. On the 23,800 put as well, the premium was 350 rupees. That's come down to around 210 rupees or thereabouts. So the writers, they definitely are feeling that maybe a near-term base has been made for the Nifty. We'll have to see whether or not that's true. But otherwise, the bulls are going to put a fight, at least for the recent low, which is at around the 23,000 odd mark. And one of the barometers in terms of hope that this geopolitical issue will not escalate from here on is L&T. The stock got the hardest hit when this conflict did break out. Now it seems some of those shorts, they're covering out. The stock has moved up from the recent low, it's up more than 10%. And there are clear signs of some shorts that are covering out. MCX, there is some kind of fear with regard to more competition coming into their dominant position, which is the commodities index. Though a couple of sell-side notes are highlighting that actually this dip is a good opportunity to buy. For the time being, there are fresh shorts being seen in the system. And Vedanta has come off, close to around 8 to around 9% in the last few trading sessions. But rather than shorts getting built up into the system, it appears there is unwinding. I say this because the stock is down and the open interest is surged by less than 2% or thereabouts. Finally, CDSL, That's the other one actually that's moving with good amount of momentum today, actually both NSTL as well as CDSL. But on CDSL, we're seeing a bit of a short covering bounce that's playing out on that one. Net, it's another good trading session for the bulls. Well, we'll slip into a short break, come back, we'll get you all the buy and sell recommendations from our technical experts. Welcome back. A double century is what we're seeing on the Nifty. The Nifty Bank, though, that's the one that's leading the way right now. JBM Auto, just take a look at that move. Stock is now locked in upper circuit. It's up close to around 20% as we speak. The government is putting out some statements now. They're saying that the LPG situation is still uncertain. Urge all the consumers to avoid panic booking of LPG, shift to other fuels as well. So that's the new space that's coming in there. By the way, besides JBM Auto, I think sales should come up for you. Stock, I think, was in the red. That's moved into the green. So that's what I'm saying. Maybe we should pull that one up for our viewers. We have Mitesh Thakkar from Bonanza Portfolio who joins us on the show. Hi, Mitesh. Good afternoon. What's the view on the Nifty? If you had a long position, you've gradually been increasing that. If you did have, I think earlier this morning you mentioned that you all hadn't carried any long positions. You could correct me on that. But what's the view? Does this look like the rally has further legs? And also fill us in with a couple of your stocks.
Yeah. So, to me, Nigel, I think, very clearly, the first target hasn't met. But typically, what happens is that since we are still in the process of coming out of the oversold levels on 2-hourly and 4-hourly charts with some volatility, I think we have a chance of getting past 23,820 and heading towards 24,250 odd levels. So in that sense, we'll maintain that short-term positive bias, though the medium-term chart is still negative to me. And therefore, I have two BTST calls. One is ATM. ATM, has reversed very nicely from lower levels. So that's a BTST with a stop at about 1,068 for targets of around 1,095. Page Industries also a similar chart. Oversold levels are very strong candle today. So Page is a BTST with a stop at about 31,480 and a target of around 32,100 can be looked at.
Okay, thank you very much for those ideas. Now let's turn our attention to some interesting market data and put the spotlight on the trends brewing in the margin trading facility book for the month of March. The most traded stocks positioning. Hormus joins in to just put this data into perspective.
This absolute mayhem that you have seen in the first couple of weeks of March until, of course, the start of this week, the Nifty was down almost 7 to 8%. But if you take a look at the MTF book, that has not seen any significant liquidation. Yes, there has been a decline, but if there is no significant one at that. Now, if you take a look at the MTF book from the 27th of February, that figure at that point stood at around about 1.15 lakh crore rupees. Now, come to this time around, as of the 16th of March, that figure stands at around 1.1 lakh crore. So as of now, the liquidation since the start of the month has been around close to 5,500 crore rupees. Now, which are the most traded stocks on the MTF book or the ones with the highest positions? HAL is one of them that has seen some bit of decline in its positions. Geo Financial, Reliance Industries, TCS has seen a very, very sharp surge. We spoke about that just a couple of weeks back about in the increase in the leverage positions for TCS, and Mazagon Dock too continues to remain a part of the top 5 traded names on the MTF book. Now, which are the stocks that have seen the biggest increase in positions? Unsurprisingly, it's Larsen & Toubro. Considering the damage that has been caused to the stock being down around about 20% until the start of this week, the positions from around about 215 crore have increased to around 570 crore rupees. That's almost a 3x jump in just the first fortnight. Polycab has seen its positions double. The Nifty Bs as well. The index itself, the Nifty ETF, has seen its leverage positions increase from just over 200 crore rupees to 350 crore. And another news-driven name, ONGC, that has seen its positions positions increased 50%, and Bajaj Finance, the stock that has been in a downtrend since the start of this month or even in the end of last month, is now seen its positions increase from 300 crore to as much as 420 crore rupees. Now, which are the stocks that have seen the biggest decline? Surprisingly, Sun Pharma is top of this list. The leveraged positions here have gone down from 270 crore to just 70 crore rupees. So that's almost a 2/3 drop in the total positions. BSE has seen some liquidation, around 850 crore to just under 600 crores now. Vari Energies is a stock that has been buzzing all through this month. So from 670 crores, that position has come down by 21%. Hindustan Copper and ITC have also seen their positions on the MTF book go down anywhere between 15 to 18%. So the markets may have seen a fair share of volatility, but the MTF book continues to remain stagnant, if not deteriorating as significantly. But there are specific stocks that are definitely making an interesting case as of now.
Thank you very much for that. Mayuresh Joshi joins in for the last leg of the show from Market Smith, India. Mayuresh, thank you very much for joining in. 3 good days on the trot. Do you think the worst is behind us, at least in terms of the price damage? That maybe the war simmers on low-grade intensity in whatever form, but markets have now priced in the casualties, the worst-case scenario?
Absolutely, Nima. I think the price action will probably suggest so. However, I think the news flow will determine how the course of the markets will probably get weird over the next few weeks. But again, I think with the news flow now appearing to be gestated by the markets after the initial 18 days, somewhere I think the markets is trying to find a foothold in terms of both the damage in terms of prices across various sectors. And where there is a perspective where the market believes that if things get better over the next few weeks, whether there can be an earnings improvement that can probably come through as we start the next financial year. So I think the optimism is starting to build in. However, I think it is too divergent as we speak. And therefore, I think you need to be a little bit watchful even at this juncture. There is no harm, Rima, in our opinion at Market Smith. That's what we've always believed. Let there be complete amount of clarity or at least some element of surety happening. Till that point of time, create your watch list of sectors and stocks which can do well in the expected bull run that probably will come.
Got it. All right. Hi, Mayuresh. Good to see you in. Mayuresh, what do you make of some of these companies, that are seeing a bit of a knee-jerk reaction because some part of their plant is shut down? For example, you had Kirloskar Ferris. We had the management that joined in today. A very small proportion of their casting business capacity was shut down. But just take a look at the market has looked through that. The stock actually is up 2.5–3%. And the management also, Mr. Gumaste was on the channel. He's guiding for better times in the coming year. Any view on this name or some of these other companies? It appears the price is already factored in some kind of shutdown. Your take?
Absolutely, Nigel. No, absolutely, I think. And therefore, I think the expectation largely is that there will be some element of a rebound, both in terms of demand dynamics, utilization levels, operating leverage, and prices catching up. Interestingly, Nigel, I was also going through, apart from Kirloskar Ferris, a couple of other names over the last few days. Lloyds Metals, which we have discussed in the past as well, along with Shyam Metallics as well. And again, interestingly, I think the kind of stuff that each of these individual companies are doing are looking very, very interesting. So Lloyds Metals, as an example, in terms of the BHQ beneficiation plant expected to come up, the slurry pipeline expected to be operational over the next few months, and the expectations in terms of better numbers coming through, both in terms of core iron ore volumes, as well as the pellet sales, where the EBITDA has probably held up even as we speak. And therefore, I think with the sheer volumes going higher, and with expectations in terms of all the ancillary elements that they're probably doing, steps in the right direction. They're getting into copper as well with a 30,000 TPA expansion or a plant announced. And therefore, I think all these elements will play out on them. So Shyam Metallics also probably seems to be a very, very interesting case, Nigel. I think the kind of expansions that they're probably planning, the cold rolling mill as an example, the expansion thereof, the stainless steel expansion of 0.2 MTPA that they're probably doing. The ferroalloys, where I think realizations have probably held up for Shyam Metallic, the Ramsarup acquisition where they've probably done. And with all that capex that is also probably happening in tough times like these, the cash flow to capex still stands at around 160%. the cash on books probably still remains very, very strong, even with that capex component coming through. And therefore, these plays become very, very interesting as we head into the next few months.
Okay, we're going to take a break here, right? Mayuresh, stay with us. Markets come off a little bit, right? I mean, I think you look at the high point of the day. I'm not sure if the rupee started falling first, but the high today was made at about, actually just as we were starting the show, at 23,862. And we are about 120 odd points off the day's high. So 23,750 is where things are at. We'll take a break. We're back. There's, I think, about 6 or 7 minutes to go for market closing. Mayuresh is with us. Stay tuned.
Welcome back. Looks like we'll close about 100 points off from the session high, which was 23,862. We're still closing up with a gain of about 180 odd points. Mayuresh, are you building some sort of a conviction around any IT stocks? Are you all able to identify the IT stocks which might do well despite the disruption?
No, Rupee, I think largely we've totally remained on sidelines. And the premise is that a large part of the price damage is largely done with. I think the lows that we've probably seen for most stocks within the sector, I think they should not probably get breached unless we have a spate of news coming out of the West in terms of further AI developments that are probably happening, which will create that negative impact on the sector in specific stocks. But one stock, I think, again, this is just from a theoretical research perspective that we are keeping on our radar, is Datamatics within the sector itself. Our sense is that the kind of numbers that Datamatics has probably put out and the expectations in terms of the AI-led moves that it is probably doing. Right moves as far as generative AI was concerned a few quarters down the line. They have made good strides into agentic AI. And like it or not, I think a large part of the back office developments that Datamatics is doing in catering to a large part of the global majors as well. And the stuff that they're probably doing make us believe that if they're probably able to do this right, I think numbers can probably hold up and be better in the coming few months.
All right, Mayuresh, we leave it there for now. Stay on because there is markets forward coming up. So there is more questions coming your way. But for now, it's 180 points higher, which means that from the high of the day, we're about 110, 120 points off. And it's happened in the last 1 hour. Basically, its high was about 227 or so before right as we were starting this edition of Closing Bell. Now, let's just look at sectors and then we'll do stocks. So we've got IT, which was by far the biggest gaining sector, 2.7% higher on the IT index, and real estate is the other one. Real estate has had it tough this year so far, and 2025 was pretty poor as well for the real estate index, 2.5% higher on the Nifty real estate index. On the downside, metals were the clear loser, but I think large, 1/3% down on the Nifty metal index, and the CPSE index and the FMCG indices were also slightly lower, marginally lower. Now, on the large cap stocks, if you just want to take a quick look at where we ended, I'll just look at the gainers to begin. Geo Financial, the top gainer, 4.5% in the green. Eternal was up 3.5%. Tech Mahindra, HCL Tech, Infosys. The IT space, IT stocks all showing up. I was talking about Mahindra day before yesterday. What a remarkable bounce that is. Remarkable means about 7-8%, but 3 days, 7-8% is not bad. And it's a large company. The low was about 28.96 and stocks ended about 3,200 today. So I think in this bounce on the Nifty, perhaps M&M will show up as the biggest gainer in that sense. Adani Ports and Axis Bank and TCS are some of the other gainers. So IT showing up in a large way. On the downside on the Nifty, Cipla, Coal India and HUL. 3 names which ended with cuts of over 1%.
All right, let's run through some of the mid-cap movers today. We had Urban Company right on top. Trident had a very large move. Angel One. So some of these capital market plays were in focus. JM Financial also moving up on large volumes. Mid-cap IT across the board, particularly a Coforge deserves mention. On the way down, Chennai Petro, MRPL weak. Couple of these metal names like Vedanta and Nalco came in for profit booking too. That brings us to a close on Closing Bell. Thank you for watching. Don't go anywhere. Markets Forward is up next.